the thing to watch is, and I'm not predicting this, but it's something to watch, is the long end of the curve. Watch the 10-year and the 30-year and see if, as the Fed cuts rates, if rates actually go up. That would indicate they're losing control, and that would indicate that they're going to need to apply even more dramatic measures like yield curve control, which when that happens is just going to be like pouring gasoline on the bull market in precious metals.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 1st through September 8th, 2025, while supplies last. 1 ounce gold Pamp Fortuna Veriscan bars are $99 over spot per ounce. 10 ounce silver Royal Canadian Mint bars, $2.49 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Steve Penny from the Silver Chartist. Steve, thank you so much for joining us today.
You bet, Elijah. Thanks for having me back. We got some exciting things going on and look forward to a good conversation.
Definitely quite exciting today as gold broke $3,600 an ounce, all-time high. It's crazy to think, in the last 12 months, we're up about 44%. And if we just repeated that in the next 12 months, we'd be above 5,000. So, it's just these projections that were pie in the sky before really is really reasonable. And I know there was a Goldman Sachs analyst who just was projecting a scenario there where she was saying, it's actually a possibility now, $5,000 an ounce gold. But your take on where we've been over the last few weeks is we've just been seeming to hit all-time high after all-time high.
Yeah, for sure. It's certainly exciting to see things move in our favor, especially for probably the majority of your audience who's been investing in precious metals for a long time, and it's been frustrating for years. So it's good to see things moving in our favor finally after all this time. I do still think we have a lot more to go, and your opening comments, I think, were really prescient because, the targets, like I personally have a price target on gold up near 15,000. Not tomorrow, not this year, but in the fullness of time over the course of this bull market. And that may still seem outlandish. However, our human minds are wired to think in linear fashion, where not exponential fashion. So, with every $1,000 move up in gold, as the higher the price goes, the less of a percentage move that is. So $5,000 from 3,600, isn't as crazy as a move from, say 2,000 to 3,500, the same $1,500 move. It's a much lower percentage. And, that's just an example of how we're not wired to think linear. So I think 15,000, and by the way, that $15,000 price projection is simply an average of the previous two bull markets, the one in 1970 through 1980, and then you call it 1999, 2000 through 2011. If you average the returns in gold through those two bull markets, that gives you about a $15,000 target.
Now, if you want to maybe share with our viewers the charts here, what are we seeing happen in gold as it's breaking into all-time highs?
So as I'm pulling that up, I'll mention that after the April peak, where we first tapped $3,500 in gold, my forecast, I believe we talked about this. I know it's been a little bit since we spoke, but I was saying, hey, I think it's very likely that we just kind of grind sideways in gold for a few months to maybe a quarter or two. And, that's not what people want to hear when it's just ripping straight up and stocks are going down. We want to hear to the move. Well, that was back in April. Well, April, May, June, July, August, now we're into September. So 6 months almost of just kind of sideways. And now we're finally breaking out. But my forecast was that gold would just kind of trend sideways to maybe with an upward bias. And that would allow silver and the mining stocks to play rapid catch up. And we're beginning to see that. That's finally coming to fruition. Now, as I share a couple of charts here, I just want a key takeaway from this interview is for people to think about your strategy. Knowing when to buy is fairly easy. It's when everyone hates it. But, everyone needs to have a personalized exit strategy of, are you going to just sit through the wild volatility? Are you going to take profits? Are you going to trade around your mining stocks? These are important things to think about, especially as things begin to move, because these bull markets are incredibly volatile. And we're seeing the volatility to the upside now. And as surely as night follows day, there will be volatility to the downside as well. So the question is, do you want to sit through that? And here's kind of a basic roadmap I have. Now, I think any roadmap should be taken with a grain of salt because no one knows the future, right? But one thing charts help us to do is, make if-then statements and have a roadmap. And then we adapt as new information comes in. And when I look here at this long-term chart for the US dollar, what I see since 2008 is a gently rising uptrend. And where are we at right now? We're right at the lower rail of that uptrend channel. And of course, the dollar has been declining for several months now, for a while. And that's been a tailwind to hard assets, namely precious metals, silver and gold. Well, I think what a lot of people maybe aren't expecting is for a pop in the dollar, an unexpected pop in the dollar. And that could result in a sharp pullback in the precious metals. I mean, we've come really far, really fast. Gold on the monthly chart is now the most overbought it's been on the RSI since 1980. It's the second highest overbought condition ever. That doesn't mean it can't go higher. And I'm not saying that. You're talking to someone who's probably as bullish as you can possibly be. I just told you I think gold's going to 15,000. I think that's fairly conservative. Silver, $200-300 or more. But at the same time, over the short term here, I think caution is warranted. So I'm certainly wouldn't be chasing, gold and silver here. But you can see on this dollar chart, we followed the roadmap so far. I drew this potential path a while ago, and we've declined. Well, now here we're sitting right at the lower rail of the support. I can see some kind of exogenous shock causing a pop in the dollar. That just intuitive reactionary flight to safety, perceived safety, because you and I both know, the dollar should not, be a safe haven, but that's the knee-jerk reaction when panics happen. So I think that could happen. That could see a pullback in precious metals. And, how you want to trade around that is obviously for you to decide. But for me personally, I plan to take a little bit off the table in my speculative mining stock positions as we move up towards 50, if that does indeed happen in silver, and then have cash available to scale back in on any kind of pullback.
And what about silver here? I know it did break a critical level of $40 per ounce, and it doesn't seem like there's much resistance up here. Prices really haven't been at these levels for that long in the past. So where do you see silver heading from here?
Yeah, great question. There's a quote, I think David Morgan coined it. At least I heard it from him. I don't know if he coined this phrase, but 90% of the move in silver bull markets happens in the last 10% of the time. And, that may not be exactly numerically correct, but conceptually, I believe it is, where you get the biggest moves in the last part, of a bull market. I'm not saying the bull market is over, but my point is, right now, we're susceptible to a sharp pullback. That is true, but we're also, I think the path of least resistance is higher, up towards 50. And this chart here, this long-term monthly log scale chart, is kind of my roadmap for, hitting higher targets near 50 and even near 75 on this move. So, silver is respecting the technicals. Right here, there's this trim profits line. So for me personally, if and when we get up to there, which coincides with somewhere between 44 and 50. So the short answer is I think we're probably headed somewhere between 44 and 50, maybe a little bit higher. But I think that could present an opportunity to take just a little bit off the table in speculative positions. Now, I just want to give a caveat. When I say that, I'm talking about paper positions. I'm not talking about going to sell your physical. To me, I view physical as a generational insurance policy against these out-of-control central planners. I don't trade that. I'm talking about if you're into mining stocks, if you're into paper trading vehicles, that could be a time to take a little bit off the table between 44 and 50 in silver. That's kind of what I'm looking to do myself.
And as for gold here, do you have any price targets of where maybe taking at least some paper profits off the table would be a good option?
Yeah, so I think in gold, we're probably already in that territory. So one of the cool things probably isn't the best way to put it, but one thing about when you're in new all-time high territory, a lot of people think that's bearish. Oh, you're overbought and it's all-time highs. Well, that's actually can be bullish as there's now no overhead resistance. But you can use kind of like price projections and measured move targets. And my measured move target for this year was about 3,500. So we've already exceeded that. So I think this could be right around in here between 3,500 and 4,000. If you're in big gold miners, like you can look at a chart of GDX and that would probably be a good one to pull up. But like on the chart for GDX, we're getting extreme overbought and we're closing in within, spitting distance of the all-time high resistance at GDX. Now you can make a case, last time GDX was at this level, gold was $1,900 back in 2011. And here we are, $3,600 gold, and GDX is just getting back to that same level. So you can make a case that it slices right through it like a hot knife through butter. However, just from a purely technical perspective, we're getting overbought here, right now, in the big gold miners. And before I moved on, I did want to just share this chart for GDX. This is that long-term monthly chart. And you can see, look at this RSI right here on the top right of the screen. I'm hovering over it for anyone watching on YouTube. The monthly RSI is at 80. That's the highest ever on record. Not like an immediate sell signal, but it's a caution signal. Kind of be aware of that. And as a general rule, when you get extreme overbought against clear, obvious resistance, typically you don't punch straight through it. So big gold miners, that just reinforces the case to maybe take a little bit off the table before, I think we're ultimately going much higher. So it's up to, individuals if they want to just sit through that volatility or, kind of use volatility to your advantage.
Now, what about platinum? I know you've been bullish platinum, and in the past said platinum has the potential, and the important word there that you've mentioned is the word potential, but that it could outperform silver given its crazy ratio to gold right now being about a third of gold's price. So your take, I guess, a little bit more than a third of gold's price, but still incredibly undervalued relative to gold if we look historically. So what is silver do, or what is platinum doing right now? I know it's about up 40% year to date here.
Yeah, you're exactly right. When we talk about platinum, platinum does have the potential to outperform even silver. That said, on a risk-adjusted basis, I think silver still, even at $42, has the most favorable risk-reward ratio across like the hard asset space. But platinum has the potential to outperform, although I think it carries a little bit more risk. So you can see here platinum has been as high as 2309, and right now it's at 1300. So right about half of its all-time high. So you used to be able to say that about silver. It's still half of its all-time high. Well, now silver is closing in on its all-time high. So platinum is the only metal that I know of that's still about half of its all-time high. And on a ratio basis, it is still extremely undervalued relative to other hard assets. And I think it still has a lot of catching up to do here. It had a really big move really fast. I mean, it was just a few months ago. Our subscribers at Silver Chartist were accumulating it down below 1,000, near $800 even, a couple times. And then it went up to 1,500. So that's a really big move really fast. So, I'd be reluctant to chase it, but, this little pullback and consolidation is healthy. This is working off some of that excess, some of the euphoric optimism, some of the kind of momentum chasers who don't understand the bullish fundamentals of platinum. So I really like having some platinum in my physical metal portfolio. I think it makes a lot of sense to have some exposure for those who can handle kind of the volatility of it.
Certainly. I know you also cover uranium, which has been up recently. Your take on uranium at the moment? I mean, I know it's been a bit volatile in price, actually, if we're looking at the chart here.
Yeah, for sure. And uranium, it's really respected the technicals lately. And, uranium is one of those assets where I like it because it really is just a pure supply-demand fundamental story. At the end of the day, the price at $75 or whatever it is right about there is still too low to incentivize the new production that's needed for all these reactors that are coming on around the world. Nuclear is a growth industry, and the AI demand, future demand for nuclear, specifically small modular reactors, is just icing on the cake. So the bullish fundamentals are off the charts for uranium. And I think this presents a very favorable risk-reward sector right now. On the technicals, the Sprott Physical Uranium Trust I use as a proxy for the physical metal, and we broke out of this clear channel, downtrend channel right here, broke out, and then what do? Back test it. So you break out. Whenever you get a breakout, very often you get a back test, and that's your opportunity to scale in if you missed, the breakout or the opportunity to buy previously. When we look at the daily chart here for the Sprott Physical Uranium Trust, and kind of see there's a very clear downtrend channel, broke above it, perfect back test of it right here, and now we're running. I wouldn't be surprised to see a little bit of consolidation here. I mean, we've had a really big move off of these lows back in April. We were buying hand over fist during those April lows in uranium because that just made no sense from a fundamental perspective, those kind of prices. But I think uranium sector has a lot of upside. In fact, I follow Chris Wright, the Energy Secretary on X, and he's posting, it seems like almost every day or every other day, about uranium. And he made a post a week or so ago, talking about the number one thing he thinks about at night is nuclear and how we need a nuclear renaissance here in the United States. So there's a lot of wind in the sails of this uranium bull market. And I think we've got a lot of room to the upside.
Now, I guess looking at the big picture here in precious metals, I mean, there are a lot of bullish fundamentals here. One of the things that I think should be highlighted is Trump's pressure on the Fed right now, and Trump firing Fed Governor Lisa Cook. A lot of people are pointing out how the threat to Fed independence could be maybe fueling this rally right now. I wanted to get your perspective on that. I mean, what do you think are the main drivers here?
Yeah, I look at like the drama going on between the Fed and the president as kind of theatrics and a sideshow. It just highlights what you and I have known for a very long time, and that's Tina. There is no alternative. The Fed is between a rock and a hard place where they have to choose between sacrificing the dollar or sacrificing the economy. And history is replete with examples where central planners, those in power, always choose to debase the currency as opposed to default honestly. The federal government's in a situation, by the way, this is all governments around the world, every single one, 100% of them, are in a situation where the debt is mathematically unrepayable. So they can choose to either debase the currency or default, honestly, and they never choose to default. So they're going to debase the currency, and that is just explanation for why there's such pressure on the Fed to lower interest rates and make more easy money to try and kick the can down the road. Because the biggest variable, we're heading to a point, and this is something I think everyone should understand, we're heading to a point where 100% of our tax dollars, 100% go to just service interest on the debt. That's the trajectory we're on. And the biggest variable in that equation of how to kick the can down the road is lowering interest rates. So, no one wants this, currency crisis to happen on their watch. So how do you kick the can? Lower interest rates. And that explains why there's such pressure on the Fed. And I will throw something out there. The futures markets are pricing in like a 90% probability that the Fed will cut rates on September 17th, just a couple weeks from now. The thing to watch is, and I'm not predicting this, but it's something to watch, is the long end of the curve. Watch the 10-year and the 30-year and see if, as the Fed cuts rates, if rates actually go up. That would be an early warning sign that perhaps the Fed is losing control. If they're cutting rates and then the long end of the curve, interest rates rise, that would indicate they're losing control, and that would indicate that they're going to need to apply even more dramatic measures like yield curve control, which when that happens is just going to be like pouring gasoline on the bull market in precious metals.
And if our viewers are interested in learning more, they can go to silverchartist.com. We'll put a link in the description there. Do you have any last thoughts for our viewers here?
Yeah, I feel like maybe I got a little bit long-winded, but the quick summary of where I think we're at in the precious metals. Short term, yes, caution warranted. I think there is more upside, but the upside potential and downside risk over the short term is not incredibly favorable. Momentum isn't on the side for a little more upside. I do think that, but I do think we're setting up for a pretty big correction and consolidation, and that's normal in a bull market, especially a silver bull market, where it's inherently volatile. However, longer term, I think we're going much higher.
Fantastic. Well, Steve Penny, thank you so much for your time today, and God bless.
Thank you so much.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for September 1st through September 8th, 2025, while supplies last. 1 ounce gold Pamp Fortuna Veriscan bars are $99 over spot per ounce. 10 ounce silver Royal Canadian Mint bars, $2.49 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.